B2Gold making some hay today. BTG on the New York Stock Exchange and BTO on the Toronto Stock Exchange. Okay, so gold's acting really well today. Most of our stock ideas are not as time sensitive as maybe perhaps this one. We're buying high quality companies for the long term. Timing does help, but it's not critical, right? You're just buying a good quality company and holding it on for the long term. It's not that we wouldn't do that with this B2Gold, but I think kind of some context of timing will give you an idea what I mean. So I'm recording this on Tuesday, March 3rd, around 3:30. Okay, and that's obviously near the end of trading. Let's back up a bit. Last week was the coronavirus crisis. The market dropped 10% in 3 days. It was one of the biggest, fastest drops in history. And then on Monday, things raced right back. So now we're in the next day and things are kind of falling apart. And these golds are acting incredibly well. And I think that's the timing part I wanted to bring up, is that this gold can really help a portfolio in rough waters, okay? Because they're a hedge against inflation. They're a safe haven. People put their money into a hard asset, over speculation on the future cash flows of some sort of business, right? It's really just putting something into a hard asset that has perceived value around the world. We could debate why gold is worth what it is, but the reality is people do consider it a hard asset that you want to hold on to in challenging times. Okay, so when the market goes a little haywire, gold can really be a strong part of your portfolio. It's not a full hedge either. It's not automatic that market goes down, gold goes up. It's not quite that good, but in many ways I kind of like it better. It's kind of an uncorrelated asset. It can be doing its own thing. I'd say usually when the market's going down, it's going up. Market can be going up and it can still be going up though, so it doesn't automatically revert. There's other dynamics with it, and overall it's kind of a zero correlated asset with your normal stock portfolio, so it actually works really quite well almost all the time. So I always think you got to have a little bit of a weighting in gold. I don't think it needs to be a huge part of your portfolio, but I think it's a decent part. Okay, so B2Gold in particular. Well, no, let's look at some of our portfolios. And much like yesterday, I was noticing that renewables were bubbling to the top. You can't help but notice that gold is bubbling to the top here. So the first portfolio I have here is our Canadian small cap, which you can imagine would have some gold in it. And it looks like the top 4 names today, let me resort that. It was sorted on Move this month, which is actually not a bad thing to look at. We'll look at that too. So Move today, there it goes, kicks in. Grand Columbia, Kirkland Lake, Torex Gold, K2 Mining. So B2Gold is not in our small cap, it's in our large cap. So literally the top 4 names, and I think that's all the gold names we have in this whole portfolio, are the top names today. Okay, and then the large cap, I would imagine we'll sort that by Move today. And I think we're going to see B2Gold, okay, up 11%. Sweet. And then Kirkland Lake, Barrick Gold at the top 3. So obviously gold is working in a very difficult market. Like the market is down about 2.5–3% today, and here the gold's coming to the rescue to save your portfolio. And that happens a lot. And it's not just a one-day phenomena. But let's sort on Move this month. And mind you, this month is very early. It's only March 3rd, but it's been a crazy market. We got B2Gold, Barrick, Kirkland Lake, and Brookfield Renewables. And if you recall yesterday, we talked about renewables. So renewables and gold seem to be the place to go at the moment. Let's do the same thing with a small cap in our portfolio and look at Move this month. Again, it's only been a couple of days. And we got to sort it from best to worst. K2 Mining, that's a gold company, Kirkland Lake, Grand Columbia, Torex Gold. Top 4 names are gold companies, and we don't have any other gold, so maybe we should. Okay, so you get the idea, right, of why gold is such a good part of the portfolio. Okay, specifically, let's talk about B2Gold. Well, they did have earnings, and let's see here. Here's the model. Earnings themselves. Let's flip back over here so I can read the data here. The earnings per share were actually flat. Or no, they were up. Excuse me, they were up 1 penny, which is 16%. It went from 6 cents to 7 cents. It's not like a big deal, right? And in fact, that only met expectations. 7 cents was the expectation. However, earnings were up 36%. I didn't have an estimate on did I say earnings? I meant revenue. Okay, the revenue was up 36%. I don't have an estimate for what the revenue was. Another fact, though, is the cash flow. Cash flow went from 74 million last year in Q4 to 145 million. That's the key right there. Okay, so revenue beat and good cash flow improvement. This is why we don't use earnings, right? Earnings goes from 6 cents to 7 cents. That's nothing. And it's because there's accounting choices and non-cash items. So management has a choice of whether or not you use whatever depreciation rate. And there's some other choices in there. And it's harder to gain cash flow. And cash flow is real. Like cash flow is, what the company actually had come into the bank, right? And that's why we use cash flow and don't use earnings. So when you look at it from a cash flow perspective, all of a sudden you go, oh, wow, 145 versus 74. That's quite a move. That's almost double. And it's amazing, right? Okay, now right back to the model. Here we go. So here you see the history, and I love how see when the returns are moving up, the stock is moving up, returns come down. And it's kind of a broad, I'll give you that, it's a broad stroke, but and then return on capital moves up, stock moves up. So right now we're at 11% return on invested capital. And that's Q3. Literally the earnings just came out. It's not in our data. I can, just by reading I just said cash flow is going to go from 74 million in Q4 to 145. I can guarantee you the cash flow IRR, return on invested capital, is going to move up. Even if it didn't move up, you'd probably look at this profile and go, hey, that's pretty good. Improving return on capital. Valuation is pretty reasonable. I think when Q4 hits our database, it's going to look even better. Okay, so there's a few reasons why you should own B2Gold, gold in general, in a portfolio in rough times, which I think we're in for because it's coronavirus and the markets are crazy. People are going to kind of go to a safe haven, hard asset gold, and specifically B2Gold has been a great company, and they just released another good quarter. That's a pretty good case in my opinion. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.